Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.9125 mark, and here on TradingView the market is up by 0.45%. and in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. So Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upper side, making it to an all-time high at around the $2.9 mark in a movement that I'm terming as a higher Elliot wave count 1 to the upper side. And after seeing the all-time high, we had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $0.31 mark in a movement that I'm terming as a higher Elliot wave count 2. And after seeing the formation of that higher Elliot wave count 2, we expect an impulsive movement to the upper side in the formation of that higher Elliot wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upper side, and sketching out a minimum target area to the upper side in the formation of this wave 3, using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $5.0316 mark, and that is the minimum that I'm expecting that wave 3 to the upper side to do, and that will play out in the next bull market. And for that to play out, we also need to continue obeying the Elliot wave structures, and because a wave 3 is an impulsive wave, we also expect to see fractal waves in formation within that wave 3. And jumping to the 4-hour chart, where we can see those fractal waves in formation, here on the 4-hour chart you can see I have this Elliot wave structure in blue, which is a fractal wave within this higher Elliot wave count 3 to the upper side. And getting a little bit into the details of the formation of this Elliot wave structure, I believe we have completed the formation of this higher Elliot wave count 1 of this Elliot wave structure in blue. And because the first wave to the upper side is also an impulsive wave, we expected to see fractal waves in formation within that first wave to the upside. And we can see over here I have this Elliot wave structure in yellow, which represents the impulsive nature of that first wave to the upper side. And now my primary scenario is that we're in the formation of this second wave, and that is what I want to base my analysis on. And because the second wave is a corrective wave, we also expect to see an ABC corrective structure in the formation of that second wave. And there are two ways I can have that ABC corrective structure, and that is what is going to give me my short-term scenarios that I'm expecting to play out here on the Polygon Matic chart. And the very first way to have that ABC corrective structure is having this as a massive wave A. We can have that as a massive wave A. And now my primary scenario is that we're in the formation of this wave B before we continue pushing even low in the formation of that wave C, which should fully maximize the formation of this second wave to the lower side. And getting a little bit into the details of the formation of this Elliot wave structure that we have right here, that is this ABC corrective structure, I can first sketch out a minimum retracement area to the upper side in the formation of this wave B, using the Fibonacci's, connecting them from the high of that wave A to the low of the wave A, and that gives me a minimum retracement area to the upper side in the formation of this wave B between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $1.09 and the $1.02 mark. And for that to play out, there are key areas and also chart patterns that we need to break out of over here. And for this movement to the upper side to play out, we need to break out of this channel that we have been trading over here to the upper side, and also manage to break above the 20-day MA. And once we have the support of the 20-day MA, then we can continue pushing even higher, manage to break above the key area of resistance at around the $0.95 mark. And once that happens, we can see a bit of a retest before we continue pushing even higher to fully maximize the formation of this wave B within this red target area that I have sketched out over here using the Fibonacci's. So that is the first possible scenario. And once we see the formation of this wave B, then we can expect a retracement to the lower side in the formation of this wave C to fully maximize the formation of that second wave. And for that to play out, we also need to continue holding above key areas here on the Fibonacci's, and using the Fibonacci's, connecting them from this low down here to these highs that we have right here. that gives me a minimum retracement area between the fib level 0.382 and the fib level 0.5, which perfectly lies between the $0.88 mark and the $0.83 mark, which is between the fib level 0.382 and the fib level 0.618. In case we continue holding above those key areas on the Fibonacci's, then there are chances that we might see that bounce to the upper side, manage to break above the key area of resistance at around the $0.95 mark and fully maximize the formation of these with B. But in case we lose those key areas on the Fibonacci's, and that would mean we'll be seeing a breakout out of the channel to the lower side, get into this target area that I have drawn out over here using the Fibonacci's. And once we lose these key areas on the Fibonacci's, and that is this target area over here, and continue pushing lower, then I'll have a different ABC corrective structure, and I'll have to remove this one that I have over here and have a new ABC corrective structure having this as the wave A. Then this might be my wave B, making a high at around the $1.17 mark. Then that corrective structure over here in the formation, that is once we lose that target area and continue pushing lower, then that is what I'll be terming as a wave C to fully maximize the formation of that second wave. So let's be patient and see how that plays out. But in case we continue holding above the area between the $0.88 mark and the $0.83 mark, then we good, and we can continue pushing higher in the formation of that wave B before we see another impulsive movement to the lower side in the formation of that wave C to fully maximize the formation of that second wave to the lower side. Also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 52 mark, meaning we have massive room for us to support any movements to the upper side. Also taking a look at the MACD. On the MACD, we have printed a bearish crossover here, but we are seeing a bit of a decrease in the selling momentum, and that would mean very soon we might be able to print a bullish cross. So let's be patient and see how that plays out, and I'll keep you updated.